Our panel is ready to talk all about OnSemi, and for this segment, I should not smile. The smiles are for our guests, not for the stock performance today. Matt Maley's here, Managing Director, Chief Market Strategist, Miller Tabak and Company, and founder of the Maley Report, and Tony Zipparro, CEO of Equity Set. Thank you both for being here. So glad you're here. However, OnSemi is getting hit hard, down 7-8%. When it was down 8%, I read on the Thinkorswim the closing low levels of July of 2022. That's tough. Tony?
Yeah, price action is not in its favor, and down 40+% over the last year, 20+% year to date. Again, no smiles to be had, as you said. I think fundamentally, though, it's a tale of two stories. It's very strong performance, improving margins, cash positions getting stronger. Again, a little bit bad guidance going forward. I just think it's the environment we're in. If you're not a darling, and even if you are, like Nvidia, you're just getting hammered on price action. And so I think it's a great company. There are strong fundamentals behind it. Just the price action for the last year really has not been going well.
Yeah, and the question is, do you step in and buy it? Do you say, oh, it's down 38% over 1 year, it's selling off today? Is today the big buying opportunity that people don't realize? You know, they did say they have a bleak outlook. They did talk about autos, industrial, low utilization, hitting margins. These were areas of weakness, weak demand. Is there some sort of secret buying opportunity in here? What do you say, Matt?
Well, I mean, the stock is starting, it's starting to get cheap. It's about 12 times earnings, and as you mentioned, we're getting down to the bear market lows of 2022. I would say this, I don't know that it's a great buying opportunity, because we know that a lot of these stocks that have been beaten up recently have kind of stayed down. We haven't seen the kind of V-shaped bottoms we have seen at other times. However, for those who are saying, hey, geez, this stock has been down, the price is lousy, let's make some more negative bets. You got to be careful of, number one, it is getting cheap. Number two, on a technical basis, is oversold. Number three, you got short interest back up to the levels near where we saw during the pandemic. So even though it may not be a great long-term buying opportunity for a little while, you could see a snapback rally at any time soon. So be careful about this one, about making any negative bets as well. I mean, my kind of idea is like, it's one you keep to the side, it's a cheap name, and look for opportunities at some point in the coming months.
Yeah, I mean, an Arizona-based chip maker, it was certainly loved. Are there more headwinds or tailwinds now, Tony?
Yeah, I just agree with Matt's point on pricing. It is cheap, but you don't want a cheap stock in this momentum market. I think if you zoom out, to the last 10-year chart, made a huge reverse head and shoulders. And so while it looks cheap on a yearly basis, you could be going back to levels of 30 or 40 before it really catches itself, but could have a bounce back up to that 58 level. And so again, you've got industry headwinds, and that's why I think this stock has absolutely been hammered in terms of pricing and valuation, right, at a 11, 12, 13 times multiple. It's one of the cheapest semi stocks you can buy. But because of those headwinds, again, people just have not been wanting to get in because there's better options or higher flying options that could provide outsized returns. And so that's where I think it's a little bit of a value trap right now. You can play some snapbacks, but yeah, a lot of headwinds ahead, especially if the AI market kind of starts to take a little bit of hit in terms of acceleration.
Yeah, the haves and have-nots. Maybe some are more attractive. Do you have, quickly, Matt, any names that you do like in this group?
Well, it's very interesting here, because you look at the SMH, which is the semiconductor ETF. It's been riding that 200-day moving average on a technical basis for about 3 months now. And this has been the most important leadership group for many decades, long before AI came around. And so whichever way it moves from that, if it can bounce off it strongly, the 200-day moving average strongly, great. If it breaks below it, just like it did in 2018, which was a very, very similar situation where the group had underperformed for a while. I guess my point is that I'm still a little nervous here with what kind of situation the AI and what kind of profitability the AI market is going to give us versus its expectations, or versus what the market's been pricing in. So I'm a little bit careful right here.
All right, Tony, do you have a pick in 10 seconds or no?
I'd say you nibble. Nvidia, Broadcom, you get a little bit on. I think you diversify, but there's no one pick that I'm confident that it's going to be a clear winner going forward.
All right, Matt Maley, Tony Zipparro, great to see you both, Matt and Tony. Thank you.